Good afternoon, everybody. Uneducated Economist here. So I thought I'd share a couple of links to some articles that I found earlier today, pretty much talking about how the dollar is going to dominate going into the future. And this is something that I have been trying to show the evidence for, explain the strategies, understand the underlying economic forces that are not going, that are existing right now, that is not going to allow the dollar to just be removed from the world reserve currency status or even make it just disappear. One of the things that we have to understand is that there is an incredible amount of dollar denominated debt that exists in the world. This is debt that is written outside of the United States. It doesn't have anything to do with our government, doesn't have anything to do with our banking system, doesn't have anything to do with the people, the investors, nothing. But this is debts and contracts that are written outside of the United States that are due in dollars. And just recently, China, I left a link down in the description, I believe it's now issuing out $40 billion of dollar denominated debt. Again, this has nothing to do with the United States. It doesn't have anything to do with our government or our banking system or the Federal Reserve or any of that stuff. But yet China is going to have to come up with the dollars in order to pay those particular dollar denominated debts going into the future, which means that China is not going to get out of the dollar. They need dollars. They will need dollars to pay those debts. And if they cannot acquire the dollars to pay those debts, they will go into default, and that is going to drag them and their economy down even further. So there's no way that they are getting out of the dollar. This is evidence of it, that they are trying to get into the dollar, or else they would not be selling dollar denominated debt out of their nation to whoever is willing to give them dollars. Right? And now, understanding that the Federal Reserve is in a position in which that it is very difficult for them to operate. You have to think they are doing two things. They are dealing with the United States domestic economy, and they are trying to provide the world with the dollars that they need. Ultimately, all those dollars are the liability coming from the Federal Reserve. The Federal Reserve buys assets like that of U.S. Treasuries, mortgage-backed securities, even gold. They put that on their balance sheet as an asset, and then they issue out liabilities, which is the dollars that we use. Now, the problem that the Federal Reserve is facing is things like what China is doing right now. By issuing out all that dollar-denominated debt, that creates a huge demand for the Federal Reserve's liabilities, which is the dollars. So now how is it that the Federal Reserve is going to provide the world with the dollars that they are needing in order to cover all the dollar-denominated debt? It becomes very difficult for the Federal Reserve to do this because it's not just a matter of printing up money. They have to be able to buy an asset to put on the balance sheet in order to print up the money. And the asset that they typically buy is sending the United States government on an unsustainable debt path. This is not something that they are looking forward to doing, is destroying the United States government. I don't believe that that is their intentions. However, if they continue down this road of debt issuance or liability issuance through the purchasing of the U.S. Treasury debt, they will send the United States government on an unsustainable debt path. This is where the stablecoins, I feel, are coming into play. And you're finding a lot more talk coming out of the Federal Reserve about the stablecoins. In fact, we covered a great speech given by, I believe, Christopher Waller a little over a month or two ago, talking about the stablecoins and how it is that they can be integrated into the economy, into the financial system. Part of this idea is that the stable coins themselves are being backed by dollars and maybe short-term treasury issuance. And with this idea that they are being backed by dollars, any monetary policy that the Federal Reserve is putting out there will be transferred through the dollar into whatever it is that's being backed by with the dollar, including those stable coins. Now, what's interesting about the communication coming from the Federal Reserve itself is that they are saying those stable coins are not up to them, the Federal Reserve, to regulate, but that it's up to the government to regulate. So now here they can have a way of creating more debt issuance and dollar issuance, liability issuance, without actually creating a cash system. or putting it into the cash system. They can have it a cashless society with the issuance of stable coins. So the Federal Reserve issues out the liability, which is then acquired by those who are issuing out the stable coin. They put that on their balance sheet and put the stable coins out there for everybody to use. So you see how this is going to create a situation in which it locks you in to the use of the stable coins because you simply can't get out of the system because you can't acquire the cash. And now this is a plan coming not only out of the Federal Reserve, but coming out of the International Monetary Fund, talking about this years ago, way before any central bank communication or central bank digital currency communication was put out there. The IMF was talking about having an e-currency, a substitute to cash. And the reason why they wanted this e-currency as a substitute to cash is because if you want to go into negative interest rates, you have to have a cashless society. Otherwise, people would just pull all their money out in cash if you would try to apply a negative interest rate to their accounts. So if you think about what it is that's taking place right now, you have a situation in which that the Federal Reserve is trying to figure out a way that they can get their liabilities out there to the world. How is it that they can get those liabilities out there to the world without completely destroying the United States by going into purchasing their debt? They simply can't do this. However, if people are not in a cash society, but in a cashless society, and you have a stable coin that is now being used in daily transactions, well, now you can control where it is that those stable coins are spent, who it is that you can transact with, where it is that they can even move to. This is like a central banker's wet dream to have a stablecoin type of application that is now put onto the economy that gives them total control of the money flow and where it can go. Once you have total control over that, now the Federal Reserve can be put into a position in which that they could be buying assets that they typically would not buy. Mainly, they could start buying the debt of foreign nations. And now this is not something that I am just making up or a conspiracy theory. You can go and look this up for yourself. In fact, Ben Bernanke was talking about it in a speech that he had given back in 2002. Deflation and how to prevent it from ever occurring here. And that if the Federal Reserve was ever put into a bind in which that they had a very limited amount of assets that they could buy, mainly the U.S. Treasury, that they could start moving into that of foreign purchases or foreign debt purchases. This is something that they already have a legal authority to do. The problem with them doing this is that they would then be moving into the currency exchanges between nations and themselves, and typically that would be left up to the government. That isn't the Federal Reserve's job. So now if they were in a position in which that they were dealing with another nation in the purchasing of their debt, putting it on their balance sheet and issuing out liabilities like the US dollar, this can create a hell of a lot of conflict. How do you prevent that money from flowing into particular directions, moving into the irrational exuberance, going into terrorist, organizations? There's all kinds of questions that can come up from it. But if you are locked into a beast system that doesn't allow you to exit out of it, and it's all digital currencies that is being controlled and tracked and traced and preventing you from actually doing the illegal things or the undesirable things coming from the central banking system, well, then they'll have their idea set in stone for you to then now be locked into. Like you won't be able to get out of it. And now this is something that I find very interesting as we start moving forward, because the idea of cryptocurrencies is quite exciting for a lot of people. Here we have like this new administration coming in that is supposed to be very Bitcoin friendly, and the idea of cryptocurrencies are very excited for a lot of people right now. I think about what it is that the Federal Reserve could possibly set up and then have the people locked in a way that they would just never be able to escape from. And I really honestly believe that this is being set up right now. And you can see the evidence of it when you think about some of the things that Christopher Waller is saying. I left a link down in the description to it. And then you assume some of the things that need to happen coming from the Federal Reserve. Mainly, how do they get the liabilities out there so that people like China can cover their debts that they have issued out in dollars? Right? How is it that the Federal Reserve can do this? There's very limited options on what it is that they can do. And when you think about the ability to lock people in a central bank digital currency or into a stable coin, then be able to purchase the debt of a foreign nation, it really seems like this is what they are guiding the people, the economy, and the governments into. It's very little doubt in my mind that at some point in the future, we will see a cashless society and we will see negative interest rates. However, we can't have both at the same time. So they are figuring out a way to create the system in which that they can remove cash. And stable coins, I believe, is it. All right, we have 192 people watching with 27 likes. Go hit that like button. We're going to be out here for probably another 20 minutes or so. And let's continue to cover this conversation. I thought was only if we accept the mission. All right, what's going on with Bitcoin? Is it a buy? This is the thing about Bitcoin. It's incredibly volatile. And when people say, should I buy now or should I wait or pull back or whatever, dollar cost average. Dollar cost average is by far the only way that I can find that is going to be a good move going into Bitcoin. Now, if you're good at market timing and trading and all that other stuff, sure, hold off and wait for a pullback and then buy in at the bottom. But I have never been good at market timing, ever. Like, I suck at it. When it comes to the lumber industry, I can see a lot of the issues that are taking place with depleted inventories and mill curtailments and lack of demand and lumber futures prices moving up. But could I tell you exactly when and where all those prices are going to move to and how far and when it... No, of course not. Nobody can predict the future. So to me, dollar cost average is the only way to go about it. And when I asked Lynn Alden, one of the smartest people I can think of when it comes to Bitcoin, how do I time the market? She said you dollar cost average for 4 years. Even if you start at the top of the market, there is no economic model that they have that shows where you would have lost if you had dollar cost average for 4 years. And I personally have a Cash App account that I had dollar cost average for a little over 3 years, and it's absolutely done wonderful, especially right now considering the height of Bitcoin price. So to me, I don't even think about whether or not it's a good or bad time. I just think, how much am I going to buy today? Or how much am I going to buy this week? Am I going to buy $50 this week or $100 this week? This week, I probably will only buy 50. But if prices drop significantly over the next couple of months, then I might go in and buy 100. But the point being is that I'm going to buy consistently for 4 years, because I know from what everything that I have learned, dollar cost averaging is by far the best way to get into Bitcoin. Again, can you make a ton of money if you buy at the bottom and sell at the top? Absolutely. How do you do that? Like, there's plenty of people out there who seem to think that they know how to do that, and I'll let you go and listen to them. I don't know how to do that. I dollar cost average, and it works out incredibly well for me. All right, moving on. Don't trust Bitcoin. I don't trust Bitcoin. Well, good for you, Brody. I mean, don't trust Bitcoin. In fact, don't trust anything out there, right? And I mean, the less you trust out there, the more you trust in yourself, right? The less you put out there for an expectation, the more you will believe in yourself. And so I totally down for that, man. Don't trust Bitcoin. All right. Is it true that 80% of Bitcoin is owned by the big players? Probably. I mean, I don't know if that makes any difference to me. Like, I mean, how much of the dollar is controlled by the big players? I mean, they have 1% of the population has 90% of the wealth. It doesn't seem to make any difference if it's dollars or Bitcoin or anything else that's out there. I mean, if you're looking for something that's fair, I don't know what that is. There's nothing that's fair out there. It's all survival of the fittest kind of thing, you know. Will Bitcoin cease to exist in the event of a digital dollar? No, I don't think there's anything out there short of a complete, grid failure or something, like the loss of all communication through internet or power source or something of that nature, I just don't see how Bitcoin can fail, because you can always just reproduce the ledger and continue on with the mining operations and the distribution and transactions and everything else that goes with it. So to me, there is no way of actually there's no way of Bitcoin actually failing, right? I mean, maybe quantum computing hack or something of that nature, but these are all very, like, I don't know, like very distant concerns for me that I just don't even consider it to be like a real problem. Dollar cost average is taking the purchase you want and buying little chunks at a time. That's right. It's like buying, saying, it's like saying, I'm going to buy $50 on the first of every month, regardless of the price. Right? And I'm going to do that for a certain amount of time. Dollar cost average for a year. Right? I have $5,000 I want to put into Bitcoin. I'm going to buy $500 worth every single month for 10 months. Right? And maybe I might skip a month if it's not a new all-time high. Like, that's dollar cost averaging. All right. Trust but verify. Cashless societies will not happen unless you are all sheep. We are not sheep. People woke up about the jab. No, see, that's the difference. People are sheep, and they will. And here's the reason that they're going to do it. About food industries, you name it, more, and people are woke up. Okay, here's the thing. Let me ask you something. You're gonna fight the system. You're gonna get into cash, right? And this is the argument for Mr. Star Path Academy. All right, so this is the plan that you have. You're going to get all your money, you're going to take it out, you're going to get out of the banking system, and you're going to hold cash, and you're going to have mattress money, right? That's what they refer to it as. You take the cash out of the bank and stick it under the mattress. Okay, so now you got all this mattress money that you're going to work with. Well, here's the problem, because the system already knows that you're going to do this. Like, they are well aware that you are not going to be approving of a cashless society, and you're not going to approve of the digital currencies. They are very well aware of that. Now, what they are going to do is create the digital currency and put it into play along with cash, and you're going to use both. And people are not going to recognize whether or not they're using cash or a digital currency, because if they're swiping their credit card, to them, they are using a digital currency, but they will have no idea if they are using a stablecoin or if they are using a intermediary clearinghouse of transactions that has banks talking to other banks in order to get the funding that they needed to the end user, or the purchaser, or the store merchant, or whatever is going on. When you have stable coins, you are not going through all these intermediaries. You're going from one to the other. It's like a peer-to-peer transaction. Now, if people don't recognize whether or not they're doing this type of transaction where it's going peer-to-peer in a stable coin kind of fashion, or if they're using cash like through a debit card and it's going through all these different intermediaries, if they don't know the difference in it, then they will fall right into the trap. Because what's going to end up happening is as they conduct themselves in a normal process of swiping their credit cards or doing their online purchases, what will end up happening is the transition going from a traditional intermediary of banks to do this transaction will be switched to stablecoin, but they won't even know that they are doing it. Like, the consumer will have no clue that they have moved into a stablecoin to make this purchase. And so, since they have no idea that that is what's happening, they will totally accept the concept of a stablecoin purchase, considering that they don't know that they're even doing it. Right? So now this is a way that they're going to get it started into the system. But then on top of it, you are aware of it. Right? You're like, oh, hell no. I'm not going to use my debit card. I'm not going to do the online purchases. I'm only going to do cash on the barrel, right? Cash on the barrel. Okay, well, here's the problem that you're going to end up facing with it is that banks are going to charge you to withdraw or deposit that cash. See, this is what the IMF said about trying to get an e-currency into play, because they know that's what you're going to do. They know you're going to pull cash out. So what they're going to do is they're going to charge you a fee to not only deposit, but to withdraw that cash. And now when you take cash down to the store is going to be like, hey, I have to pay a fee to deposit this cash into my bank. You're going to have to pay a higher price for the item so that I have reimbursement for the fee that I'm going to be charged. So now pretty soon using cash becomes very burdensome, right? It ends up costing you more. Why would you pay $1.50 for something when you could pay $1.20 and use your debit card. You see where I'm kind of getting at? When you think about what it is that they can do to prevent you from using cash, that cash can then become obsolete within the broader economy, as people simply do not want to use it because of the burden that is attached to it by depositing or withdrawing it from the bank. That will then force you into the central bank digital currency or a stable coin or some kind of tokenized dollar of some sort, and then you will not be able to escape once you have moved into it. This is like literally how the game is going to come down. Like, I mean, I can't predict the future, just like anybody else can't predict the future. Nobody can do that, right? But if you listen to some of the issues that these central bankers are facing and what it is that they have communicated already out there to the public and to the other central bankers out there of what it is that they can and should be doing going into the future with the digital currencies and the cashless society and the negative interest rates, they have thought of many different strategies. The ones where we think, oh man, we're just going to pull all our cash out, they thought of that. Oh, we'll just take all our stable coins and move it into gold and silver. They'll block the transactions. They'll tax the transactions. They'll make it a way that says, nah, man, you can't do that, because if you do, it's not going to benefit you in any way. This is how they're going to lock you in. And it's, it's not some conspiracy theory. I mean, just look at the article. I mean, Christopher Waller's talking about stablecoins, and a few months ago, he gave a detailed speech that we covered in our member-only videos. We covered that entire speech, breaking down exactly what it is that they are intending to do with these stablecoins. And part of that is to have them, the Federal Reserve, not be in control of the regulations or the control of the financial markets that are using the stablecoins. They will be in charge of the dollar itself, right? And I mean, I guess the financial system with the Federal Reserve System part of things. But when it comes to the rules and regulations, they're going to leave that up to the government. They're going to step away from it and say, hey, no, we're in charge of monetary policy. You're in charge of the rules and regulations. You deal with these people. We're going to deal with the monetary policy and the dollar. And whatever monetary policy that we have that's being conducted with the dollar will transfer right into those stable coins. So they're like setting this system up. Like, they're getting it prepared for use. Let's go check out this super chat. We got Frank Obi with the $5. First time donator. Thank you very much. Wanted to hear your thoughts on Bitcoin and how it requires increasingly more energy consumption to mine Bitcoin. Is this sustainable? Yes, I do believe it is. And the reason why I think it is because you're always going to find places where it is easier and cheaper and more efficient to mine the Bitcoins. And now think about this in a kind of I was kind of rolling this idea around in my head. Think about what Bitcoin can do to get to, like, literally slingshot people to the other side of the wedge. Like, I think about it myself. Dollar cost averaged for 4 years. After 4 years, if Bitcoin moved up in a significant fashion, it moves up to $100,000, $150,000 a coin, it could put me in a position in which that dollar cost averaging for 4 years, just literally saving in Bitcoin as opposed to saving in a cash bank account, could possibly give me a position in which to move into a property owner. Like, be able to cash out of my Bitcoin and move into property. Now, for those of you who follow me on my channel for any length of time, you've heard me say it time and time again. If you want to get on the other side of the wedge, you have to be a capitalist or a property owner. I would like to be both. And if Bitcoin can then slingshot me into property ownership, and amongst like many other people who typically would not have access to get into property, but they do have the ability to dollar cost average into Bitcoin, and during these volatile moves, when it shoots up to its all-time highs, to be able to move from a Bitcoin position into a property owner, think about how this can really be a game changer for a lot of people out there who really feel that the inequality is something that cannot be solved or beat, right? Here it is, an ability for you to become that property owner, and you can do it with the slingshotting effect of the volatility coming out of Bitcoin. It's a very disciplined move, but it's possible. Now, you also think about it, if there's energy that can be produced in cheap areas, You find some location in, I don't know, you find some location of an old power plant that used to be used for producing for a manufacturer, and they can produce cheap power out of there, but the manufacturer that was using the power no longer exists. Well, you might be able to take advantage of that cheap power. Maybe it's hydroelectric power, maybe it's solar power, maybe it's some other wind turbine kind of power. Who knows how or where it can come from, but to find that efficient power source and then be able to mine Bitcoin from it doesn't necessarily mean that it has to come from expensive places. So now here, those cheaper places that can produce it, which typically may not have any other consumption of that energy, can then now give them the ability to mine Bitcoin and bring in new money through the Bitcoin production, essentially. Right? Like, to me, this could be an equalizer to what a lot of people think is a concentration of wealth. And it really is. When you think about, like, 90% of the people might, or 90% of the Bitcoin is owned by just a handful of people, well, that's like wealth in general, right? Like, there's no difference between Bitcoin or property or, debt or anything else out there. What time is it? Alrighty, guys, I'm going to give it like 5 more minutes here. The stock market had always gone up since 1971 when the gold standard was abandoned. I don't think it was always gone up, right? There's times in which that it didn't go up. There's times in which that it fell. But generally speaking, had you purchased in 1971 or any other time since then, you would most likely be up on it. But not always is that the case. I mean, there are times in which the market is not doing well. Same thing with gold and silver or anything else out there. It's just a matter of, when did you position yourself into it? Did you buy over time? And then how is it in timing? Like, how much and what time are you getting out? Like, a lot of people might have bought in silver way back in the early 80s thinking, man, I'm going to protect my wealth and I'm going to just load up on silver. They never did find another time in history in which that they could escape. They were locked in at $50 an ounce when they bought at the high in the early 80s, and maybe had a small brief opportunity in 2011 to get out, but there was never a time in which that they would ever be able to get their money back out of it. Not always are you buying in a position in which that is going to be successful years down the road. Now, dollar cost averaging, most likely you're probably going to be fairly okay. Could you have done better? Absolutely. Right? You can always time it better and be at the bottom of the market and sell at the top, but most of us are not going to be able to do that. So dollar cost averaging into it over time is going to be the best way to go about it, at least in my opinion. Silver is not concentrated. That's why always oppressed. It's illegal to pay over 2,000 euros in cash. That's crazy, right? Everyone who leveraged their Bitcoin will get rugged. Banks already limit your cash deposits and withdrawals based on several circumstances, right? See, now think about it. If it went down to something as simple as $100, like you want to withdraw $100 or deposit $100 and it ended up costing you like $10 to do it. People would be like, man, I'm losing 10% of the money every time I move cash around. They would not use it. They would just simply not use it. All right. George Gammon for head of the Federal Reserve. Yeah, that would be interesting. I'd love to see George up there raising hell, man. That would be awesome. All right. I'll let you do your own research on the technicals. How will you leverage BTC, all-nighter? XRP is the future of finance. See, now this is funny. Like, I hear a lot of people talking about XRP being the future of finance, and I have read a ton of Federal Reserve documents, speeches, talking about digital currencies, talking about stablecoins. Never, ever, ever once have I ever heard them talk about incorporating XRP. Not one time, right? Now, there are mentions of XRP on the Federal Reserve's website, but it's coming generally from other people who are trying to send a message or an idea or a concept to the Federal Reserve, but it's not the Federal Reserve incorporating XRP into their strategies. Never once can I find that. Now, plenty of people out there are saying, oh man, look at all this evidence of all these different people who are setting it up and getting ready to do it. That's fine, right? I'm not trying to deny it, saying that it's not going to happen. What I'm trying to say is that everything that I have learned about monetary policy coming from the Federal Reserve very much has stablecoins in mind, not a Fed coin, right? Not a central bank digital currency coming directly from the Fed, but stable coins, which is being issued essentially by private parties using the dollar for the backing of that stable coin, and then using the government to regulate the stable coins. That is all the communication that I hear coming from the Federal Reserve, and it very much seems in line to what it is that they are doing right now. XRP, no mention of it whatsoever within the Federal Reserve and their monetary policies. Not one. All right? So, I mean, believe what you will. I'm not trying to deny the idea that XRP will be used in international transactions between central bankers and all the other stuff that they claim that it's going to do. I'm not trying to deny that. What I'm trying to say is that I'm not finding that evidence coming from the Federal Reserve, the people who are in charge of monetary policy. Right? I mean, if there was anybody who was going to discuss it on what it is that's going to actually take place in the future, I would believe it would be the people who are in charge of monetary policy. And the people who are in charge of monetary policy don't talk about XRP, they talk about stablecoins. Just saying. They talk about regulating stablecoins, using the government to do it, and they talk about their monetary policy being transferred right into the stablecoins. So that's what I believe is coming. All right. Companies offering leverage against BTC. I'm not near that stage yet, so I haven't researched them yet. Yeah, and I'm in agreement. Hey, you guys. Sorry that was a Goonie shout out. Right on. It's great to see you up in here, Mr. Balloon Pump. I believe inflation will continue to go up. Do you think so? Well, I think the inflation expectation will be elevated going into the future, especially if you have like massive impact coming from the new administration that is pushing out there like massive tariffs on the people and a lot of like, major changes to the way things are handled. I think just the pushing of that information out there will elevate the inflation expectation. And with an elevated inflation expectation, it's a self-fulfilling prophecy. You will see inflation begin to rise for that. Now, this is something that we had discussed in yesterday's video, talking about the tariffs and how they are the new credible threat. But I really do believe that if you can raise the inflation expectation, what you will do is you will begin to raise the neutral interest rate. By raising the neutral interest rate, the Federal Reserve and their position with the Fed funds rate will become less restrictive. It won't become accommodating, right? Because the Fed funds rate would have to be below the neutral interest rate. But if it is above the neutral interest rate and they are standing still or even falling a little bit with the Fed funds rate, and the neutral interest rate begins to rise on higher inflation expectations, then what will happen is that gap between the two, which is the restriction on the economy, will become less. Right? It's not exactly stimulating the economy, but it's becoming less restrictive. Like massive tariffs and high inflation expectation could actually be somewhat stimulating to the economy. Not necessarily stimulating, but less restrictive. You know what I mean, right? All right, let's check out this super chat. We got JGD with the $5. What if the Fed just capped the supply of USD? Short-term pain for long-term gain. Love your stuff. I don't think that they could just cap the supply. Like to say, hey, we're not going to issue out any more dollars from here, because what will end up happening is that dollar-denominated debt, much like what China is issuing out right now, those people would have a very difficult time trying to find the dollars, because if you don't have new dollars coming in, then the old dollars that are out there in circulation will be hoarded, right? If they are hoarded, less supply then can be available for those who are looking to that dollar-denominated or that dollar issuance. There will be more people out there looking for that, less available supply. They won't be able to pay their debts. Those debts begin to go into default. The dollar strengthens. domestic manufacturers here in the United States start suffering because a stronger dollar means the exports get more expensive, this would be very damaging to not only the economy, but then to the Federal Reserve System, as the demand for liabilities are far exceeding what it is that they can supply them with. So it's not a matter of them saying, hey, we need to cap it. What would really need to happen is you can't be issuing out dollar-denominated debt out there. And the Federal Reserve has no control over that. Our government has no control over that. There's nothing we can do to prevent somebody else out there. Like this, think about it. If you wrote a contract up to your buddy, hey man, I owe you $100 next month, and you hand that over to him, you just created dollar-denominated debt. Like, it didn't take anybody's permission. It didn't take, a government to say, hey man, you can or cannot do that. None of that. But yet now this dollar-denominated debt exists, and you just created it. Now think about it. Other nations, other corporations, other people out there outside of the United States can very well do that. Now all these contracts, they get used like dollars. Like they're performing transactions. This contract that somebody just literally wrote up is now being used to facilitate transactions. So not only do you have dollars doing transactions, but then you got somebody who's just literally making money up out of thin air by writing a contract that's due in dollars, and they're using that as transactable contract. Right? So you think about how much dollar activity is actually existing out there. It's absolutely mind-blowing, considering we don't even really know to what extent. Like once these contracts start coming due, you're going to start finding the demand for dollars to pay those contracts are going to start really ramping up. And if there's not enough liabilities from the Federal Reserve to push out there to cover all that dollar-denominated debt, you are going to find the dollar strengthen. And if they're not issuing out new currency, then you're going to find it strengthen even more as people are going to start hoarding onto it, right? It actually will create a situation in which that king dollar will come and destroy the world. That's really what's going to end up happening. It's not the BRICS taking over causing the dollar to fail, right? What's going to cause the dollar to fail is the fact that people are no longer writing debts in dollars. That's what's going to cause the dollar to fail. And when it does, it's going to cause it to go strengthening to the point that it fails. Not like losing purchasing power to failure. That's what everybody believes. That's what the Federal Reserve wants everybody to believe, right? Because the problem that they were facing was an inflation expectation that was persistently too low rather than too high. But now that they are sitting in a situation in which that the inflation expectation is too high, they now have the ability to conduct themselves in a way that they typically would have been able to do when the inflation was low, when the interest rates were low, right? The neutral interest rate was low. This was very damaging for the Federal Reserve and how it is that they operate monetary policy. But now they're in a much different position. Alrighty, guys, I got to go. It was fun hanging out. We're going to do a lumber video here probably tomorrow or the next day. We got lumber futures closing on Friday, and they are moving up to not necessarily year-long highs, but getting very close to it. I mean, we're at 580 per thousand, and I could only assume that the futures are going to close somewhere probably above this and closer to 600 per thousand, which is something that we have been trying to, show and communicate out there to the people, that the demand for lumber, if it was to ever ramp up, we would find that there is not enough supply and the prices are going to skyrocket. And I think that this is evidence, or the preliminary evidence, of that sort of mindset that is coming to the lumber market. All right, hit them like buttons as if it was a domino voting machine. Thank you, Star Path Academy. I really appreciate you, man. Vote in Adelaide Saturday? Adelaide? Huh. Uneducated Economist. Well, maybe sleep on the question and talk about it next time. Okay. Alrighty, guys. I would love to sit here and keep answering questions, but I have got to go back to work because, We all got bills to pay. All right. Thank you, JC, for being here. Thank you, All Nighter. Thank you, Brody. Thank you, everybody who has been supporting the Uneducated Economist. Thank you for hitting that like button. Thank you for the super chats. Thank you for going down into the description and checking out the Amazon affiliate link where you can go and buy the Cantillon essay from the Amazon affiliate link, but you don't have to buy the essay. You can get that essay for free at the Mises Institute. But by clicking on that affiliate link, go and put whatever you want into your cart. Go and purchase whatever you want from Amazon. The Uneducated Economist will still get a little commission off of it, so you can support the Uneducated Economist by simply just making purchases off of Amazon of whatever it is that you truly wanted. Bad Dog Bobby, thank you so much for that $10 super chat. You guys are awesome. Thank you for being here. Uneducated Economist, you let me know.